Well, thank you for joining me today. I'm delighted to be speaking to Liz Bottomley, who's the Managing Director of BOS Wealth Management in Europe. Welcome, Liz.
Thank you, David. Thanks.
So we're recording this interview as part of a short series that we're doing with Bank of Singapore to illuminate on some of the key trends from the ultra high net worth of family office space connecting Asia to Europe. But before we get into our discussion, it'd be great to hear a little bit about the origins of BOS's wealth management proposition out of London. Could you just walk us through how it came about?
Yeah, okay. So no, that's a good place to start, isn't it? So, BOS is a very well-known brand name in Asia, particularly Singapore. And I think for some time, BOS was considering how it could expand into Europe and the UK. So actually following the Brexit vote a few years ago now, they looked at establishing a subsidiary in Luxembourg, which they did in 2018. And then I came on board at the very end of 2018 to establish the UK branch of that subsidiary. So BOS Wealth Management, a subsidiary of BOS, having offices in Luxembourg and the UK means that we can market to clients wherever they are, really, in Europe or the UK.
Okay, thanks. And what kind of services are most popular? Is it for Asian families with family members coming into the UK, for example, becoming residents, and people looking for lending on property, trust services? What sort of things comes up most frequently?
Yeah, sure. So in short, BOS Wealth Management, we really act as a gateway, and we bring investment ideas from Asia and emerging markets to the UK. So we're an asset manager here in London, and we offer our clients relationship management out of London and investment expertise with assets custodized in Singapore. So we book all our assets with our custodian, BOS, in Singapore. We work on an open architecture basis, and we offer optimum solutions tailored to our clients' needs. We find that many clients come to us because they want to achieve a greater diversification. They're already perhaps with a US bank, a Swiss bank, and a UK bank, but they don't necessarily have an Asian private bank into the mix. So that's really where we can come in. We're offering something different to complement the existing advisors that they use. And the clients that we tend to work well with are interested in having a greater exposure to Asia and emerging markets, maybe via discretionary fund management, advisory services, or through our execution platform. And clients seek us out as a counterparty to manage credit risk due to BOS's strong credit rating as well. So really, we are that gateway to Asia locally here from the UK.
And on that diversification point, for ultra high net worth families, it's important to have diversification geographically, but as well also in mindset, isn't it? Like a UK manager is naturally UK biased. US banks and Swiss banks have a certain investment management style, don't they? So it's beyond having jurisdictional spread, like spreading assets in different locations, but also it's the way in which those investment management teams go about deriving returns. Would you say that's fair across those two points where people are seeking diversification?
Yes, I think so. I mean, diversification for us, what we're seeing is that clients, firstly, they like the safety aspect of BOS and our credit rating, AA1. OCBC, our parent group, is one of the most stable and secure banks in Asia. And also Singapore as a jurisdiction, it maintains a very robust regulatory framework, which gives clients peace of mind that Singapore is the right location for them to book assets in. And so that's on the safety side of things, if you like, but also on the investment side, you're very right in that the Swiss bank would have a different approach to, say, your discretionary managed growth portfolio. The way we would do things is that a client with us with a growth portfolio would have a higher weighting of fixed income, for example, typically investment grade and high yield. And then of their equity exposure, a higher percentage of that would be in Asian emerging markets than they would typically get with, say, a UK or a Swiss bank. So again, like you say, it's a different mentality, different methodology, but it works really well to complement what they do have with the Swiss bank, for example.
Yeah, exactly. It's working all together in concert, isn't it, for the ultra high net worth client? And I suppose it's partly as well the amount of coverage you can give to the Asian equity stocks. So if you're going to have a portfolio of direct stocks with an Asian focus, there's not many groups out of Europe that can provide those sort of high conviction recommendations. So the manpower that you have in Asia and the analysis and the thought leadership must give you a real edge for those who are seeking a bigger allocation towards Asia, particularly for those who see that as a center of economic growth and prosperity. As we move through, you finding more of demand for these sort of direct equity style mandates with managers who are real specialists across the Asia region?
Yeah, so yes, we are definitely, and that's why clients would come to us predominantly, and we have that, research capability. We're there on the ground, and I think people want that peace of mind. And as you say, a lot of people are looking east, and they think that Asia is going to be the growth vehicle for the next foreseeable future. So it's a really important allocation that they would want to make. And I think one interesting fact, for example, is that over the last 8 years, I think there's been 199 defaults of emerging market bonds, and we've only held one of those within our portfolios. So, it's quite an impressive statistic when you look at it that way. But I think as well that clients are interested in other areas where we can facilitate them access. So, for example, to the pre-IPO and direct investment opportunities with an Asian tilt, because it's offering them the opportunity to invest in ideas which aren't offered by others through the institutional access that we have to capital markets. So that again is, sort of allows us to present clients with something different that perhaps they're not getting from their other banks. And that's, where you want to be, complementing and making sure that the client's got access to as much that's relevant to them as possible.
I'd imagine that kind of deal flow is very attractive to family office sector in London, who is really looking for different kinds of investments that they can put in front of a principal who's a sophisticated investor, to actually unearth that deal flow without the help of someone like Bank of Singapore would be impossible. So, I mean, are you seeing the family office sector in London being sort of quite active and vibrant? I mean, what kind of trends are you seeing from the family office sector in London?
Yeah, I think family offices in London are interested, particularly on the PE side of things. And we've spent a lot of time talking to family offices about what we can do. And I think they do see private equity as a key long-term driver in their overall sort of strategic asset allocation. And it's been great that we've been able to provide them with access and transact in some of the most exciting companies in Asia, as well as developed markets on a direct basis. That's definitely a sort of key niche for us in the family office sector.
We've picked up on a trend recently about family offices employing more of a virtual team with the pandemic, meaning offices are being closed. I was speaking recently to a Jersey trustee who says actually they're just assembling teams of people where specialist expertise lies, and the family office no longer needs the premises in Mayfair to call itself such. Are you seeing any changes in behaviours in the family office sector through the pandemic, which has caused lots of different change in the way that people work? And the family office sector is not immune to that. It's also adapting to this new way of working flexibly, remotely, internationally. Do you think that you could be a beneficiary of that, in the sense of people are looking at different ways they plug into resources on a very global scale?
Yeah, I think so. Definitely. I mean, what we're seeing is that, at this stage in the pandemic, that family offices are reviewing their investment strategies. And we have seen a greater level, I think, of outsourcing for Asia and emerging market, that particular portion of their asset allocation. And they're very much looking for sophisticated investment ideas. And like you say, you don't, I mean, everyone's the same, aren't they? Everyone's used to doing this virtual conversation now. And I think particularly with us, that's helped us because obviously we've got a wealth of expertise and knowledge sat with our colleagues in Singapore. And, we often get family offices to tap into that expertise, have conversations, etc. We can facilitate that, and it's just the norm now because we can do it through Teams or Zoom or whatever it is.
I think it makes it easier in the family office sector because they might be, if they're very private and reluctant to actually engage with a bank in person because they feel they're going to be pushed to buy product, but actually to tune into some of the digital content, I think is a better access point because it provides there's less barriers in many ways to actually tapping into knowledge that could ultimately benefit them. Do you think that some of the online tools that we've been using actually applied in the family office context could provide a driver of value rather than detracting from the audience that is available in a traditional conference sense, things like that? Have you seen any changes in that way?
I think people have just been very open to the new way of working, haven't they? And I think family offices, multi-family offices, that very much the same as us, that there's more time for them to spend speaking to their clients, which is a good thing. Same thing for us with our direct clients, So yeah, I think it's a good trend.
Okay, and I mean, more generally looking at London and the interest from wealthy clients in Asia in London, what's your outlook for the UK? I mean, we're well post Brexit now in a sense. We're battling through COVID. There's a lot of headwinds, but you read about the property market, prime property, there being record demand. There's a record sort of set in M&A and corporate activity at the moment. So are you an optimist for UK PLC and demand from Asia?
Definitely.
That way?
I am very much an optimist, yeah. And I think that the UK is still a very attractive destination, particularly given what's happening in Hong Kong, etc. I mean, we're seeing, if we're definitely seeing an uptick of inquiries, etc. From Chinese clients, for example. You only need to look at COVID has affected the investor visa situation, but once that eases, I think the numbers have increased and will continue to increase. And I think the UK is an attractive destination for those, for those people because. It's really lovely to live in London, isn't it? But B, like you say, the property market, it's very open to overseas buyers in the property market, and Asians in particular, I think, love the UK property market.
Absolutely. I mean, the education sector continues to be a very strong driver, doesn't it? I mean, hopefully the UK can maintain its status in terms of university and school education, because that is a terrific way to attract wealth and talent, isn't it, into the country? I'm sure you see that as part of the mix as well.
Definitely, yeah. And I also think if you look at the number of tech businesses being invested in by Asians, and this whole technopreneur, as we call it, segment, is something that we're really focusing on. And I think the UK is sort of positioning itself really well in that sector as well.
Well, thank you for talking to me today, Liz. Real pleasure to speak, and we look forward to sharing this with our members.
Thanks very much, David. Thanks for your time. Thank you.